Hey everybody, Matt Madison with Doug Madison Realty. This is your June 2022 market update. Let me set the expectation in the beginning. So this video is going to take somewhere between 15 and 18 minutes. Now I know that you don't want to sit here for that long, but I think that this information is going to be beneficial to you. And my goal as I give you this information is to hopefully inform you in such a way that's going to help you when you go to make a real estate decision in the future. So, without further ado, let's talk about what's on the screen because for the last several months, it has all been about mortgage rates. And one of the things, the old adage is that when mortgage rates rise, they take the elevator. But when they fall, they take the steps. So as we think about that, let's see what our first expert has to say about what's going on with mortgages. So June 2nd, 2022, Sam Kater, chief economist for Freddie Mac, said mortgage rates continue to inch downward this week, but are still significantly higher than last year, affecting affordability and purchase demand. Heading into the summer, the potential homebuyer pool has shrunk, supplies on the rise, and the housing market is normalizing. This is welcome news following unprecedented market tightness over the last couple of years. He also said May 19th, 2022, economic uncertainty is causing mortgage rate volatility. Now, you know what's been going on in our world over the last several months, right? We've had war in Ukraine, we've had inflation at a 40-year high, gas prices are through the roof. There's just so much going on in our world right now. As we talk about that, we need to look at what's going on with your 5/1 ARM rate. It's interesting because it's still at a very good number, which is 4%, 4.04%. This might be an option for you if you're thinking about possibly selling within the next 4 or 5 years and moving on to something else. This rate will stay flat for the first 5 years of your loan, and then it has the potential to go up after that point. But a lot of times, ARMs have gotten a bad rap just because rates have been so low. But this might be a good alternative for you as you wait for rates to hopefully come down in the future. Now, speaking about that, let's talk about what rates have done since December of last year. So they started out at 3.11%. That was on 12/30/2021, and they have steadily gone up. And they've gone up, and they basically hit their plateau level basically on the third week in April. Now they have gone up just a couple of weeks later, but seem to have come down and have plateaued at 5.09%. Now it's important to put this into perspective as we look at what current mortgage rates, comparatively speaking, to the last 5 decades. So everybody wants to be concerned about mortgage rates being 5%, but could you imagine back in the 80s when they were at 12.7%? So statistically speaking, we still are in a very good situation. But here's the problem. A lot of people, this is their first time buying a home, and they're looking at rates at 5%, when of just a few months ago, they could have had 3%. So we've got to be sensitive to that as we talk to people about what's going on in the real estate market rate-wise. Now, perfect versus expert advice. Let me give you a situation. Hypothetical situation. Go to the doctor and you get a diagnosis, right? This is expert. This is an expert that's giving you a diagnosis, right? And they put you on a treatment plan. Sometimes that works Sometimes you have to adjust it. Sometimes it doesn't work at all. And there's no such thing as perfect advice. There's expert advice, and a lot of what I'm going to give you today is coming from the experts. And hopefully, they're going to be right more than they're going to be off. But just know that you can trust an expert, but it's never going to be perfect advice. Now, if we're looking at treasury yields, this is some expert advice. If you're looking at treasury yields over the past 50 years, you can pretty much find out what's going on with mortgage rates. The average spread between the 10-year treasury yield and the 30-year mortgage rate is 1.7%. All the way back since 1972, we've been tracking this and seeing how that's played true over the years. Let's look at a graph from just this year. It's gone up actually to 2.91%, which is where it is currently as rates are hovering a little bit over 5%. So we can see that this still holds true. Hopefully these are going to come together. Hopefully rates are going to come down to where the treasury yield will not have to come up to have that 1.7% rate be applicable for the rest of the year. So now the question is, are we in a market correction? Well, the answer to that is no, we're not. And here's why. Because the definition of a market correction is a decline of 10% or greater in the price of a security or a financial market. You know what the prediction is for this year is for housing to go up another 9%. 8.9% is what the forecast is for 2022. So the housing market is really, it's at a turning point, according to Daniel Hale, chief economist of Realtor.com. We're starting to see signs of a new direction, but the ball is still in the seller's court in most housing markets. Now, this next graph will show you how showings have continued to be at all-time high levels over the course of the past few months. Now, if you look back to your pre-pandemic times, they were much lower. We're almost seeing twice as many showings on properties today than we were back in 2019. This shows you the pre-pandemic level compared to where we are today. Existing home sales. So existing home sales actually were at their highest rate back in 2021 at 6.1 million existing home sales, right? But 2020 was also a great year at 5.6. Currently, our estimate is at 5.6 this year as well. So we're looking again at pre-pandemic sales and where we are today. So we're definitely doing better than we were in 2017. Now, national average days on the market, 17 days on the market. This still shows that we are in a very active market, and sellers, it still remains a seller's market. Now remember, a balanced market is 6 months. So you can see how the market has shifted and has been this way for a long time as far as being in a seller's market is concerned. We have also average number of offers. has been 5.5 offers per home on the market. So as you can see, there's still a lot of activity in the market, and it still remains a seller's market. With more than one offer, of course, many times it goes well over what they're asking on the property. And what I'm seeing too in the market is this: many times investors are coming in and buying these homes and turning them into rental properties to basically increase the value of their mutual fund, 401k, or whatever instrument they have. So that's something else. The investor market is still extremely active, right? So the real question is, what are happening with mortgage rates, right? Well, Mike Fratantano, chief economist, says this. He says mortgage rates are likely to plateau near their current levels. Okay, the financial markets have attempted to price in the impact of the Fed's action over this cycle, and they are likely also pricing in the economic slowdown that will result. Once we are past this rate spike and associated volatility, expectation that potential home buyers may be more willing to re-enter the market. So that's kind of what the experts are saying. Now, 2022 total home sale forecast in the millions. Well, you can see here, it's predicted Fannie Mae from 6.1 to 6.3 for NRA, 6.7 for MBA, all the way up to 6.9 million homes is the prediction for 2022. So we are not in a bubble. Homes are continuing to sell in this market. And experts don't believe the market's in a bubble or that a crash is in the cards like during the Great Recession. The nation is still suffering from a housing shortage that has reached crisis proportions at a time when many millennials are reaching the age when they start to consider home ownership. That's likely to keep the prices high. Now, let me talk just for a minute about what happened in 2008. 2008, the crash happened, and then for a few years after that, no one wanted to build homes. So we have a shortage issue in our country because of the fact that fear was the factor in builders not wanting to build new homes in the course of that 3 or 4 year period after we were involved in that crash. So with fear led the charge there, and that's what happened, and that has been one of the factors that has led to our shortage of housing today. So the big question is, are we going into a recession? Well, let's take a look at this slide and see what the National Bureau of Economic Research defines a recession as this: a significant decline in economic activity spreading across the economy, lasting more than a few months, normally visible in real GDP, real income, employment, industrial production, and wholesale retail sales. Now, what happens if we do go into a recession down the road? How does that affect home prices? Well, check out this new graph that we just got in that I think is gonna really impact what you think about the recession. Doesn't necessarily mean home prices are going in the tank, right? As you can see, out of the last 6 recessions we've had, there have only been 2 that have negatively affected home prices. Of course, 2008 was the largest crash that we've had since the Great Depression. So if you take that out, then 4 out of the past 5 have been increasing in home prices during that time period. So what about buying a home? So well, Shivani Peterson, a mortgage expert, said if you are looking to buy a home, I would still recommend you do so even at the highest interest rates, because we have no reason to believe that home prices will stop appreciating. Home values going up is only a problem when you're trying to buy it. When you own it, it's a gift, right? So anytime historically when mortgage rates go up, home prices go up. So the longer you wait, the less likely you are to buy that home that you could have possibly afforded a year ago, right? So I encourage you, if you're on the fence, look into going ahead and locking in now, because we don't know, and that's exactly what we've talked about today, what is actually going to happen with mortgage rates now. Uh, Also, I wanted to let you know that I do have some summer buyer and seller guides. They're now available. If you'd like to reach out to me, I'd be glad to send you over some information about that, and hopefully this will be additional information that will help you as you think about buying or selling real estate. Now, this month is actually National Homeowners Month, um, and it's a great time to own a home. If this is your first time, or you'd like information on owning a home, and I would like to talk to me personally, just reach out and I will try to contact you. And this concludes our June 2022 market report. I hope this information was helpful. I look forward to doing this again for you in July, and hopefully with some encouraging news about interest rates coming down and inflation coming down and that sort of thing. So be optimistic, and hopefully things will get better. And look forward to seeing you real soon. Take care. Have a great rest of your day, and God bless.